The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 23rd, magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. Now, my outcome here during the next hour is to help you to become a better money master. And that means I want to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. How about this one? The power of focus. I've got a question for you. What's your outcome for the day? Is it written down? Well, look, whether it is or not, take a moment to write down your outcome for the day. And if you don't have one, create one. And if you don't know what it could be, well, what could it be? If you could come up with an outcome, what could it be that you would want to accomplish? You see, by writing something down on paper, don't do this in your head. By writing something down on paper, we begin to make a contract with ourselves, and it begins the process of focus. And that's important because focus truly is the ultimate power. You see, focus can change the way we think. It can change the way we feel, and it can change what we do in any given moment. When you and we can change our focus, we determine the direction that we will travel. So let me share with you a 4-step process that can help you attain anything that you want in life, folks. Number 1, write down 2 or 3 things that you often focus on that make you feel stressed. That's right, things that make you feel stressed or overwhelmed. You see, the first secret to creating change is what I call awareness, as this step allows us to find out what we are currently focused on that provides us with absolutely no benefit, certainly no positive benefit. And these happen to be things that we tend to fear. Number 2, step 2, write down 1 or 2 things you're going to do today that, quite frankly, don't have any real sense of purpose. You know, things that don't really juice you up, or things that you're going to do today that won't really help you achieve your outcome. You see, the reasons that we need to do this are because you and we're equal when it comes to one thing for sure, and that's called time. You see, no one gets an extra second. No one has a time advantage, and that makes us all equal. But most people will tell you that they don't accomplish what they want is because they don't have enough time. And therefore, the way to get more time, which is really just another way of getting more emotion, is to get rid of the unnecessary things that steal our time. There are things that each of us do during the day that if we didn't do them, would life really be all that bad out there? Folks, we only have a certain finite amount of time. Number 3, write down 1 or 2 specific outcomes or results that you want for the day. That's it, just 1 or 2 things. Things that if you were to achieve them, well, they would provide you with a sense of accomplishment. You see, the key of focus, the key is also to always focus on what it is that you want. And lastly, number 4, write down what it will cost you if you don't take the time to do the first 3 steps out there. What will it cost you? What will it cost your family? What will it cost your friends, your coworkers, your career? Things like that. Better yet, let me just state this in a more positive way. Write down what you could have if you did achieve your outcome. What are all the things that you could provide to everyone in your life if you did achieve your outcome? So these are the first 4 steps to design your day. And I also consider those to be the steps to design the life that each of us deserve out there. It's really simple. They, again, are number 1, what are you focused on that stresses you? Number 2, what do you do during the day that doesn't help you attain your outcome? Number 3, what are the outcomes that would change your life? And number 4, what will it cost you if you don't achieve your outcomes? You see, the ultimate power in life, folks, it is the power of focus. This is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got markets relatively quiet and flat out here. The Dow's off 17 points, trading out at 16,927. S&P basically totally flat, traded 1962. NASDAQ composite off 3 points, trading at 43.64. Russell 2000 up 79 cents. It's trading out at 11.89. NDX 100 off 5 points at 37.97. 37.97 out there. Gold back 80 cents at 13.15. Silver off 6 pennies at 20.88. Light sweet crude down 57 cents. She's trading out at 106.27. Our call number is 877 927-6648. Give us a call, folks. We can take a look at what you would like to look at out here. Let's go take a look at the ETF structures out here. Let's start off by taking a look at what they are doing. The index ETF structure is really what I should say. Let's start off by taking a look at the Qs. It's off 21 cents right now, trading out at 92.55. Let's go see what it's running into out here. The Qs, let's see, it's trading below, it's trading right into its point of control. Speaking of control out here, trading right into it. That is the blue horizontal line coming across my screen. Let me get rid of the A to B equals CD pattern. I'll clean this up just a tad here. So right now, support, key level of support inside the QQQ today is going to be 92.31. Key level of resistance, 93.02. A close above 93.02, that's bullish. A close below 92.31, that is bearish out there. Right now, it is neutral as we take a look at what's going on inside of the Qs out here. Let's take a look at the I'm sorry, here, just kind of multitasking. Let's go take a look at the IWM out here. Let's go see what it is doing. It's trading down 8 pennies at 118.17 out here. 118.17. Its unfair high is 116.84. It is trading well above that, so it's a nice bullish mode out here. The IWM actually now is the strongest of the indexes, strongest of the ETFs out here. Looks like it wants to move up maybe to 119.25. No reversal signals or anything along those lines. Watch 116.84. That is a level, or should be a level of support. A close below that starts to get more towards the neutral type zone. Bearish would be a close below 114.30. We have not seen that here as of yet. Let's take a look at the SPY out here. We've got the SPY. It's trading out at the level of 195.87. It's off 7 points out. It looks like a brand new market profile has just formed here today. Not that much different than the prior one. Nonetheless, support here. Its resistance zone ought to be 195.20. Close below 195.20 inside of the SPY. That sets off a message of support down at the 193.46. A close below 193.46. That would be start to get bearish. Of course, you'd want to be paying attention to the swing point of June the 12th. That's got volume of 106 million shares. The low there, 193.11. That's going to be a key area to be focused on and paying attention to. Let's go finish this baby off. Let's go take a look at the Dow Diamonds. DIA off 23 cents, trading out at 168.85. Let's go see where it is trading down into. Well, it's got its resistance. It's what should now be support. Its market profile resistance level 167.78. So ultimate support on this ought to be the 166.88. So no message here of bearishness. In fact, it's all bullish as we take a look at the Dow Diamonds as we speak at the moment. Let's go to our first caller. Let's go to Lou in Nashua.
Somebody.
I'm sorry?
Okay. Hello?
Yeah. Lou, are you there?
Yes.
How you doing this morning?
Not bad. How are you?
Good, thank you. Now, you wanted to look at hogs, right? And I don't trade the hogs. Any idea what the symbol is?
No, I don't have it. I don't have my computer right now. It's just the
okay.
October Hogs call.
Let's see here. Yeah. And I don't. I'll have to look it up, Lou. So what I'll do is during the next break, I'll go search for it. And then, are you looking? Are you long hogs? Are you short hogs? Tell me what you're.
I wanted to go long.
You wanted to go long. Okay. What we'll do. So I got somebody posting something, but I'll get that symbol. I'll get that symbol. We'll take a look at. I'll try to find some support and resistance. I just don't have it off the top of my head. I don't trade it, but I'll get that information for you. And then if you listen during the after we come through the next break, which is about 4 minutes or so, in about 10 minutes or so, I'll have some information for you on that. All right?
Okay, I'll listen to that. I'll get it on my computer. Listen.
All right. Anything else that you need that you're looking at buying or?
I'm going to go long the 30-year bond.
The 30-year bond. All right. So let's go take using what, the TLT or?
No, it's futures.
The futures. Okay, let's go take a look at the 30-year Treasury out here. Let's go see what it is doing. We can pop that up on the screen here. Give me a moment to find that. Come on, where is it? Bonds. There we go. Let's take a look at the 30-year Treasury. If we take a look at the weekly, so the weekly here, it's kind of interesting. On the weekly chart here, now see, this is the continuous contract that I'm taking a look at, and if we take a look at it, it's holding the level. It's old. This has been trading in a consolidation for quite a while, Lou, and it broke through that back in the trading session of July of 2013. It's back up inside here. So if you were taking a look at a long trade here, the weekly chart says, okay, you don't want to give it too much room. In fact, it closed below the June 6th low out there would say being long is wrong out there. And that's right at the 134.15 area. Let me take a look at the daily chart here, and the current contract here, I'm going to assume is more. Let's take a look at the. Let's take a look here at the continuous for the moment. Let me see what it shows. So the continuous contract here shows a nice little trend line, Lou, coming off of the December 31st area out here. That has held. That's the, if we take a look at that low, that was right around the 127.23 area. Then if you take a look at the low from March 7th, right around 130.20, you can see the trend here is held. So the weekly and the daily are confirming two things, that the 30-year Treasury's back is up against its wall. So if you're looking to go long the bonds, this would be the area to do it in, and you don't have to give it too much room out there. And that's what the continuous contracts are showing. I hope that helps you out.
Yeah, it does. Thanks a lot, Steve.
You bet. All right. That was Lou in Nashua, and I'll try to get the hogs out there, and looks like LH. Okay, lean hogs. That would make sense. Thank you, Z. So let me go put that up on the screen out there. Let's close all. Let me put up the current LH, and the current contract here is August. So let's go take a look at it. Let's go see what we can find. Let me get rid of the volumes out here. All right, now for this contract. Just widen this up. Okay, so if we take a look at lean hogs, they made a nice run up here into the June 13th level right at 132.15. Let me see how overbought or oversold this is here, this relative strength index. So neither overbought nor oversold out here. If you're looking for a buy, Lou, the better buy would be if this actually could form some type of A to B equals CD to the downside. And that would take you down into a price level. Looks like testing the swing point lows back here, maybe around May 28th. And that's right around the 123.80-ish type level out there. Let me take a look and see off of its swing point low from April 9th, 2014, up to that recent high. Actually, the better trade might be pulling down in the 121.68-ish type range out here. But I would wait for some type of pattern versus buying it right here. You can see how this PEDS, I guess this is the PEDS virus that was out here. Take a look at how this thing really just stayed in the overbought zone until it made its highs back here back in March. That the retracement. When we come back, we'll measure the retracement here off of the highs back in April to the low that was put in April as well. That might give us another idea as a buy point. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 23, S&P flat, NASDAQ Composite flat, Russell 2000 flat, NDX 100 flat, New York Stock Exchange flat, gold flat, silver flat, light sweet crude up 43 cents out here, so I'll try to keep you entertained in a flat market as best that I can. So we had Lou call earlier. He was looking for lean hogs. He was taking a look at maybe some entry areas. We are coming into the summer season, huh? You got the summer solstice this past Saturday. We've got July 4th, so should be plenty of hogs on the barbecue out here. So what I would do, Lou, is I would wait for another retracement. Perhaps it's going to be the A to B equals CD down pattern, as I had mentioned. Now, the question is, only 60% of the time do you get a 1-to-1 A to B equals CD to the upside or downside here. You would need to see the low here, the swing point from June 18th. That had 18,000 contracts out there. You need to see that get busted out. If it gets busted out with more than 18,000 contracts, that'll be telling us that most likely this will do a larger A to B equals CD to the downside. This yellow box area here, this rectangle shape that I'm showing out here, that's equal to the last retracement off of its highs from March 20th down to the low that was put in here on April the 8th. And so that's kind of an ideal area. The current retracement that we have seen here, let me pull this off to the side. The current retracement that we have seen here, measured in approximation, if we take a look at, that would be coming off of the May 21st high to the low that was put out here on May 28th. We've seen that, in essence, already take place. So that was your first move down. You'd expect coming into the summer season here that we would see the highs actually being tested out here of the June 13th area. But you're better off as waiting for some other pattern, in my opinion. in lieu to form out here if you are trading the lean hogs. Let's go take a look here at what do we want to look at? Let's go take a look at some things that are moving in the marketplace. No, you know what? Let's do this. Let me pull up the weekly chart here first. Let's go see. The week ended last week. I wasn't with you. I wasn't with you during the 9 o'clock show. I was traveling, but I do thank Basil for filling in for me. Let's see if we can find a weekly chart. Of course, we can find anything we want. Here's the daily chart. Let's go take a look at the weekly chart here. See how the week ended. See what we've got here candle-wise. Let's take a look at the indexes. Let's do that. Give me a moment. We'll take a look at the composite first and see what it's doing here. So you got the NASDAQ composite. That's what we have on our screen here. We've got a weekly chart. We take a look at last week. It's still in the process of making higher highs and doing it on less relative strength. Never a good thing, but that can be resolved to the upside out here by continuing its move higher. That's the black diagonal lines that you see on my chart out here. The very first time that it created a problem where it was making new highs with less relative strength, and we saw a indication that it was ready to take a breather. That was back here the week of January 24th, 2014. We saw that it went down and made a nice low back in February. February 5th was the day of the low. The week of February 7th was the candle formation that we were looking at. Then we had another price relative strength. We saw a higher high that took place back the week of March 7th. Got a little bear sash candle the very next month out here. Price went ahead and moved lower out here, so we have now a third time is the charm, but we do not have any kind of reversal signal whatsoever, so all things still on a weekly chart for the NASDAQ composite looking bullish. Daily-wise here, today, we do have a bearish engulfing candle session that is forming. So on the daily chart, it's giving us a signal here. It also has a price relative strength divergent pattern out here. And that says a bullish engulfing candle would be your first confirmation of a short-term top and a minimum, because we're looking at a daily chart out here. But, of course, Friday's action was so narrow that to form a bearish engulfing candle would not take much, because the body of that candle session out here was small. So you'd want to see something a little bit more like a close below the low of Friday's session. Inside of the composite, that low happens to be 4354.03, 4354.03. That would be the number to be paying attention to for some type of short-term toppy pattern inside of the composite. Inside of the Dow Jones Industrials out here, on its daily chart, nothing bearish as we take a look at it. It's dealing with the swing point here, which has already tested the June 9th high, and that high is 16,970.17 out here. So the daily chart looks bullish, no bearish signs at all that we can see. Let's take a look at its weekly chart, see how it completed the week out here. They're also forming at this stage let me pull this back. This can't be right. Why is this not showing? Come on, let me update this. 16,947, is that where it's trading at? I don't think so. Reload. Let me reload here. That could be wrong. Let me pull this over here. What's it trading at? No, it's not. 16,910. Well, that's strange. I don't know why. I've got an issue there. But, hey, I do. And how about that for a strategic commercial break out there while Stevie can go try to figure out what the heck is going on here in his weekly chart for the Dow Jones Industrials. Right now, the Dow is off 34, S&P down 97 cents. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 22 points. Again, the rest of the markets out here are flat. So I was struggling with my charting application. Looks like it's kicked in here now, but we're talking about the Dow. So let me give you something better than what that application was showing to us anyways. How about that? How about if I just give us better information? Let's do that by going and taking a look at the futures market. I want to show you the Dow futures here. So this is important to be paying attention to. Now, it's important at the end of the trading session. So let's look at it. If you take a look at today's candle, right here, this is what we're looking at if you're watching us on Tiger TV. What information is that giving to you right now? Just throwing that out there for those of you that are following along. You're following along on your own charting system out here. If you're looking at the Dow futures, it's not a bearish candle, really, so to speak. But what's the message of that candle signal out here? Well, look, if you're watching us on Tiger TV, first, the red horizontal line going across my screen, that happens to be the resistance of its market profile. Getting above that, closing above that, I should say, would be bullish, 16,889. It's tested that level. It's acted as resistance. It's trading right now down into its point of control. It's the largest congestion for those of you driving right now on the road. You might be driving somewhere, or maybe you drove into work this morning and you came into an area that normally acts as congestion. Well, that's really what the market also has a congestion area. And the market, once it really clears those congestion areas, much like you might do, you might floor it. or you might at least elevate your speed a bit, and even though you've got free sailing. That's really what these market profiles are doing. You get above the high, you get above the low, you get above support, or you get below support, you get above resistance. It's kind of free sailing to the next swing point or retracement level or some area of natural area of other type of support or resistance here. Well, what's really important about today's session is if we look at Friday's session, the high of Friday was 16,895. The high so far today, 16,911. The low of Friday, how low can you go? The low was 16,815. The low so far today, 16,808. Just giving you a little hint out there. Yes, that means today, any close below 16,911, so 16,910 actually qualifies out there. That, folks, qualifies as a key reversal session. Now, is that important? If you watch us on Tiger TV, you can see the very bottom of my screen, the little blue squiggly line out there. That's the relative strength indicator, and it's only at 62.98, so it's not at 70. Somebody might say, hey, key reversal sessions can only happen with three things happening. The one of them I just gave you. You've got the current day's high and low needs to exceed the prior day's high and low. Well, it's done that. Number two, it needs to close in the opposite direction. Well, I gave you that number, and he closed below 16,911. We're not there yet, but he closed below 16,911 out there. That would be number two. And number three must come from an extended condition. Now, extended conditions, the ways to take a look at that, it's not just using the relative strength indicator. It's not just using an A to B equals CD. It's not just using the Fibonacci expansion. Hey, those are three nice ways to be able to identify an extended market condition. I would have to say testing an all-time swing point high out there, that qualifies as well as a potential extended condition out there. In fact, if anything, it's making a higher high than it did previously and doing it with less relative strength. That, too, sends a message of, something to think about. So whereas on the Dow daily chart, the weekly chart, my other tool that I was using for some reason, that wasn't updating, that just sent me over here to say, well, what piece of information is the market communicating to us, if anything, out there? And why are those key reversal sessions important? Well, if we take a look at the last lot of them in here, inside of the Dow, you'd come back to the trading session here of May 14th. That formed a key reversal session. Price then went down and tested. Not only tested, it broke through the lows out here of its unfair support areas. That's a reason to look at it. How about the time before that? Takes you back to April 4th. This was, of course, as the market was making newer highs out here. Key reversal, bearish engulfing session. Market moved down. In fact, it formed a little A to B equals CD to the downside is what it looks like here. We take a look at that. That's your A point right here on the high of April 4th, the B point down here on the May 8th low, your C point up here on the trading session of April 10th. 1-to-1 A to B equals CD. Price out at 15,845. What happened? Price got down to 15,809 out there. Not too shabby. Completed an A to B equals CD to the downside out here. No pattern like that we can talk about or discuss at the moment, but key reversal session, that was very important to be paying attention to. Any others that I can see back here real quickly? Looks like Stevie can. Let's take a look at the trading session back here on January 21st, 2014. The market made that high December 31st, traveled sideways to slightly lower back on January 13th, but you got a key reversal session right here, January 21st out there, by the way. It had tested the high of its unfair high, its resistance level of its market profile, tested the low, and the next two trading sessions went ahead and broke lower, and that's where we saw the deeper retracement into February 3rd. So the question is it something to be paying attention to? Well, I wouldn't have shared it with you if it wasn't out there. So let's watch the Dow. Doesn't mean it's going to reverse here. Just means we now have a pattern, a previous pattern that's been in place, and now on a daily chart, we've got a pattern in place that we want to most certainly observe. Any close below 16,769 on top of what we just took a look at sends a message of a market moving lower and most likely into the swing point area from May 20th out there. Inside the Dow futures takes you into the price range of about 16,430 to a low of 16,238 out there. Now, the Dow futures out here, they're the only ones to have a key reversal session thus far, I believe. Let's take a look at the NQ out here. NASDAQ futures, they would need today, in order to do the same thing, they would need to at least intra-session get below 37.8475. So far, we've only seen 37.86, so just a couple of points away from being able to form that. But it, too, if it does that, could form a key reversal session up at a resistance level, and that, too, would create some type of synergy amongst the futures contracts out here. The Russell 2000, which is really the kingpin as we speak right now. Yeah, sure, it's not over its highs back on March 7th. Nonetheless, it is still the one that is in bullish condition, most bullish condition out here above its resistance area of its market profile, which is 1175.40. So in order to get this thing back into the corral, it's going to need to close back below that level. A close back below there today would also then form a key reversal session. So any sell-off, if there is one, I'm not saying there's going to be, but I can tell you what it is that you want to pay attention to, what it is that you want to look at out there, and that's at 1175.40. And as I mentioned during the first hour, there's a intra-session gap that's wide. That's wide enough that's inside of the euro U.S. dollar that is very unusual, extremely unusual. To see a couple pips, no big deal out there. You know, that's just the spread out there. But to see the type of gap, let me put it back up on the screen out here, that took place at between 3 and 3:30. Well, I can tell you exactly when it actually took place. Why don't I do that? Of course, I need to actually put up the right chart in order to do that, or I need to just click on the right chart. Well, it's the euro U.S. dollar. Hey, I'll eventually get there. Just give me time. Third time is the charm out here, and so that gap. Let's get rid of that right now. You can see this gap right here. It took place at is that the one we're looking at? This one says at 9:03. That's not what I was looking at. Here we go. Back here. So that's just kind of that's another one. But that's kind of small. Again, we're looking at a 1 minute chart here. So, you know, it's this gap right here. This gap. Look, folks, this went from, if you take a look at 3 o'clock exactly, 3 a.m., the close of that session was at 136.029 out here. The open of the next session was at 135.946. That's wide price spread. You know, if you're trading the currency pair out here, and I don't know what that means. It's just unusual to see small gaps like this. That's just kind of normal stuff, but that's a large one. That's a large one, and I don't know the meaning behind that. I do know that we need to pay attention. I believe we need to pay attention to it, because there must be some message that it is trying to send to us. We can see how important that, where the sellers have been out here. Now, I've showed the body of the candle because I was using that as an example during the previous hour just to show you where that gap was. By looking at a larger term chart here, this is a 30-minute chart, I was able to first pick off the gap that was out there. It's kind of like, hey, I just need to refresh my chart, and it'll go ahead and fill in the information out here. And then when I did refresh the chart, it didn't fill in the information. I was like, very interesting, as Colonel Klink used to say out there. In any event, not to get off kilter out here. Not that I'm really ever off of kilter, but let's go check in on the euro Japanese yen out here. Let's go take a look at that currency pair, see what it is doing. You know, not too shabby. Let me take a look at its 120-minute chart. It did get into an oversold condition this morning as it moved lower at about 5 a.m. You can see that relative strength indicator. Again, 120-minute chart, great tool, 14 period, to help you identify overbought, oversold conditions out here. So far all we've seen is just a little bit of a bounce off of that. Looks like it's setting up an A to B equals CD to the downside. That ought to take the currency pair down to about the area of approximately 138.02, 137.85 out there. Maybe that takes us all the way back into the swing here from 5 p.m. That was on June 12th. So the Euro-Japanese yen trading a bit lower. That's what's helped to, the Dow futures were up at least 50-plus points last night. Maybe a bit more. I wasn't paying attention after I went to sleep. I just simply closed the eyes out there. So let's go take a look at some things that are moving in the marketplace out here. Let's go see what we've got that's moving and grooving. Today's movers, you got Integris Energy, TEG. We took a look at that. Buffalo Wild Wings, that's taking out a swing point, moving higher, doing it with volume. Intercept Pharmaceuticals, let's take a look at that. ICPT up 681, up 2.5% out here. No real message. It looks like it's trading into its point of control out here right around the 291-ish level. Should find support at 236.60. It closed below that. Says it probably runs all the way back down to the breakout session, and that took place on January 6th, and the low out there was 65.22. Take a look at exhaustion moves out here. That's an exhaustion move on that. That's a weekly chart. Let me take a look at, that's an exhaustion on a weekly chart. Let's put the daily chart up on the screen out here, see what it is doing. So it's found resistance, found support, I should say, at its gap. So you had a big gap up here when they cured something. That was on January 9th, and that low is 231 to 31. You know, any close below 231 out here, 250.81 on its daily chart is support. But any close below 231, that says, look out, because this thing, especially if it were to break the swing of April 15th out there, the low of which is 209, would not be good news. That would be bad news, and that could take it all the way back down to the bottom of the gap and that like 68 type dollar area out there, I suppose. Anyways, that's on Intercept Pharmaceuticals. Let's take a look at something with smaller gaps than that. Let's take a look at Regeneron Pharmaceuticals. To the downside, REGN is the ticker symbol. Moving lower here this morning, this looks to be in bearish kind of territory, trying to take out a swing point here. If it can get below the swing from April 28th, that low is 273.23. It's trading at 279.84. Volume there, 1.2 million shares. You're trading into that session, doing it so far today with 416,000 shares. We've been trading here for an hour and 17 minutes. Hour, 1.2 million. It's done for, it's actually picking up volume, Regeneron Pharmaceuticals, as it is moving into that swing point. Now, if it can take out that low, this will set up an A to B equals CD to the downside. The A point being the high from March 6th, the B point being the session we were looking at. That is the April 28th level. That becomes your B point. And your C looks like a little shooting star inside of Regeneron that took place on the trading session of June 9th. High there, 320. Even Steven. 1-to-1 A to B equals CD, and Regeneron would take you to the 270-74 type area out here. It is moving towards a over sold-ish type condition, but still coming to that swing point with too much volume. That was a daily. The weekly chart out here, let's see what it shows on Regeneron. Not too bad. Shows it's an unfair low at support area on its market profile, 274.20. It has not seen a close below that. So if you do see a close below that, a close below the swing point that we were looking at, again, that number looks like that's right around 273.23. That will be bad news. Bad news bears for Regeneron Pharmaceuticals. It does have a volume bar out here that has been acting as the support area. So, and that's a big volume bar. April 29th, for the week of April 29, 2013, 25 million shares there. That would say the support ought to be the bottom of that, which would be the 212.50 area, which I think lines up. Let's see if it lines up with the A to B equals CD to the downside, which it has not completed or formed yet. That would be your 1 to 1.272 A to B equals CD to the downside. And that is on Regeneron Pharmaceuticals. REGN is the ticker symbol. Also trading to the downside out here, Aegis Pharmaceuticals, AGIO is the ticker symbol, not to be confused with Eeny, Meeny, Miny, Mo, but AGIO, it's trading down about 10% off $5. Looks like this is that's a weekly chart. We'll take a look at the daily chart when we get back. This thing has got some volume off of its highs so far today. 326,000 shares Friday. It only did 480 up at its highs. A little volume off the high. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 37 at the moment. S&P off a couple. NASDAQ Composite off 6. Russell down a point. New York Stock Exchange off 14. But we still see net advancing issues today. Still advancing issues 1523 versus declining of 1394. So we've got net advancing issues there. Not seeing any kind of bearish action as of yet inside the New York Stock Exchange. That would take 567 net declining issues to go ahead and give the ball back to the bears out there. And if it could happen, today's the day. After all, yesterday was a P-index day. It was depending on which ephemeris you want to use out there. If you were using the original work that Larry did with Dr. Ruth Miller out there, then Sunday marked a 2 planetary index day, something that is relatively unusual in the marketplace out there. Likewise, if you use the New American Ephemeris, the current one, it's a 3 planetary index day, and that also qualifies as a potential something or other. Whether that's a change in trend, we'll know soon enough out here. I gave you what to be focused on when we take a look at the Dow, NASDAQ out there with regard to other key type reversal sessions in the marketplace to be focused on. So that's kind of what's going on. The VIX index right now, it is up 47 cents, up about 4%. It's trading out 1132. I can tell you that the 50-day exponential moving average, that's the key number to be paying attention to, 1241. It's trading at 1132 as we speak right now. So I don't suspect that's going to come into play today. And if it did, you'd end up having a one-day rate of change in excess of 10%. That would tell you to expect a bounce over the next 48 hours or so. However, a gradual move higher, a little bit different message inside the market. So, again, New York Stock Exchange issues to be looking for 567 or more. Of course, the VIX index, the 50-day exponential moving average, 1241. As long as it stays below that, that's bullish in the marketplace. So, what else should we be taking a look? Let's go back. There was a stock that we were looking at before we went to break. It was AGO, Aegis Pharmaceuticals. I did mention that some volume off of the highs out here. Its all-time high took place here on Friday. So it made a high. 480,000 shares out there, which was taking on previous swing points that had 537, a previous swing point that had 369,000, a previous swing point that had 1.3 million. No dice as it took out those highs. Now it looks to be, and you've got volume off of the high. So far today, 348,000 shares. Really, this has been traveling in a sideways consolidation ever since this nice breakout session from the trading session of March the 6th. So the low out there, which is $30.51. That's your target range area for a buy. Maybe it's more like $31.42. Maybe it's more like around the $31.52. But that's the consolidation range. So long as volume starts to contract. Knew I could find the word. As long as volume starts to contract as it moves into those swing point areas. AGIO is the ticker symbol. Let's see, what else do we have out here of any significance? FMC Corp, or Altasource Resident. Let's take a look at FMC. It's down 3.5% off 265. Oh, looks like it's down also with some volume out here. So let's take a look and see what this is trading into its swing point from May 16th. That had volume of 1.1 million shares. So far today, 1.2 million shares. That, if it breaks the swing point, sets up an A to B equals CD to the downside. You say where? I'll tell you where. The A point is the high from March the 10th. The B point's the swing it's taking on right now from May 16th. The C point looks like right around the June 6th high. If it breaks that swing point, looks like this will want to trade down to about 65.44. Folks, it is Magnificent Monday. Thanks so much for joining us. Stay tuned. Our man Basil Chapman is up next. Then the inventor, the creator of the P-Index dates, Larry Pesavento, he'll be up after that. Take care, folks. Have a great Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.